and would just love to get your overall thoughts on the market right now and, anything that has kind of been showing up on your radar. I know you're very in tune with the news and everything.
Yeah, so it's, business as usual. Nothing's really changed. A lot of volatility intraday. So if you're taking quick trades, scalps, quick day trades, you're in good shape. But if you're watching the day-to-day action and you're a swing trader, I think you're not having a really good time. So, I think right now you have to be looking at where momentum is. So one thing I do is I'm monitoring the major indices. For instance, clean energy moved today. So whether it's TAN with solar, ICLN with clean energy, PBW, names like ENPH, big moves. So, we're seeing quick cycles again of money. So having your eye on the ball in terms of what's moving intraday, I think is what you have to do. And then looking for stocks that are pulling back to key support levels. I mean, UPST pulled back, and look at the massive bounce that it's had. It's not giving you much opportunity. You can't think twice. You can't blink because these moves will happen in an instance. And now you have stocks like DATS, DATS, that's been coming up, 25% move, big move after hours. So it's also keeping an eye on the new names that are starting to show up. So that's kind of been my approach to the market. Love to hear what everybody else has to say.
Awesome. Love the perspective. Yeah, I've certainly been talking with a lot of swing traders in this area. They've emphasized to me the importance of stop losses in this type of market. A lot of people getting stopped out of many positions today, but continuing to keep in tune with the news. Also, I just put out a tweet. If everybody's seeing that tweet says that we are live. It's got the link. If anybody in the audience wants the, depths of my heart, if you could just go ahead, head into my page and just retweet that would be amazing. That's going to really blow this up. We had 1,000 people on this last week. Would love to, break that record this week. Andrew, going to you next.
What's going on, everyone? Yeah, I definitely agree with what Danny was saying, how it's definitely a challenging environment.
Hello.
If you're trying to swing trade stocks, and let's say your time horizon is like, you normally swing trade, you buy like 3-week options and, you look for a quick move. And if you're getting stuck in those, it can really be a challenging environment. Like really what I'm seeing on the headline indices is these FANG names have been very weak. Like Facebook, for instance, which I actually bought today. Facebook has just had a 17% correction from the highs, and it just pulled down to the 200-day simple moving average. When you have names like Facebook, Google, Apple, etc., that are not really performing very well, it's incredibly challenging for the S&P 500 to make any progress. So it's really interesting, actually, how if you primarily are an S&P 500 trader, which I know a lot of people are, it's a super liquid instrument to get in and out of. I don't think many people realize that you're essentially making a bet on 5 stocks. And if those stocks enter downtrends, you're basically out of luck. But I think what we're starting to see over the last few weeks is we've moved from this downtrending market to now we're just kind of chopping around. We haven't made a new low, maybe a week or two, something like that. We're really just chopping in a very narrow range. So if you're just trading those indices, it's like, oh man, these things are doing nothing. But under the hood, there are some really good stocks that are moving. And it's just kind of these individual names are really defying gravity. The small caps are actually positive on the day today. So it's kind of cliche to say, but it definitely seems like in this environment, it's a stock picker's market where there's some individual names that are showing strength and then some individual themes that are showing strength, like the energy stocks, which we talked about in our last meeting, cryptocurrencies, Chinese stocks are starting to perk up a little bit. Solar names are catching some flows today. So yeah, if you're just looking at the headline indices, nothing is going on, but there's some interesting opportunities under the surface for sure.
Seems to be the common theme here. It's that stock pickers market versus some of these overall just, rolling with the index. Although, you can trade that index as well on a daily basis. Also, to my speakers, feel free to use the nest or the space up top. If you have something that you want to pin, whether that's news or something applicable to the market, I'm happy to have you all use that so that we can share those items visually with the crowd. All right, keeping the ball rolling. Wolfie, would you like to go next?
Yeah, sure. Yeah, so the last time I talked to you was probably like a month and a half ago on one of these spaces, but um,
Nah, it
essentially,
was last. It was 2 Fridays ago.
oh no, I'm talking about one of these. I'm sorry, I forgot about that one. But the last time before that was probably 2 weeks before that as well. Um, and essentially, we were going into a really piss poor historical month. And if you just take a look at like last year, for example, it's the same kind of mantra, go into a weak seasonality on the back of, a strong rally, right? So if I could just give you an analogy, just think of it as like Thanksgiving dinner or a really big dinner that you go to. You kind of eat as much as you want, you fatten up, and then you got to digest it. You got to kind of like sit there, can't really do anything. You're kind of lethargic. So we're just kind of going through this like, digestion period in a seasonally weak moment, and on the back of a really strong rally across the board. And then on top of that, you get kind of like softening in terms of catalysts. So it's like there's no earnings period, buyback periods start to cool off. And then everyone just kind of sits on pins and needles waiting for the Fed's last call before the new year. So you get this like really tumultuous time. The interesting thing, despite all of that, is two things. One, from May until September, we were led by like a handful of stocks. So like Google, Microsoft, Apple, Amazon, all those stocks, the big ones accounted for more than half of the gains from May to September. I know I like beat that one like a drum in the summer, but so you have more than half the gains coming from them. Conversely, you had like energy, materials, etc., kind of got unwound during that period. So the weird thing is, it's not like really that weird, but the interesting thing is, um, in the last month, if you look at the equal weight S&P, it's actually outperforming. So like all these smaller stocks that kind of got left for dead while the mega caps and the tech and the favorite names started to um, take off, now are doing the opposite. That's one. Two, the the Kathy Wood phenomenon that we saw early kind of reached its peak. Um, I mean, not I wouldn't say what would be the opposite of fanboy, but whatever it is. So it's reaching like a peak fold right now. So in the month of September, the ARK ETF saw its largest outflows of any month to date. So I kind of feels like you're getting to a point where, it depends on earnings, depends on a catalyst. We could be reaching the bottom or close to a bottom for year end, where you kind of get like one last regurgitation, and then things just kind of like whoever folded folded, and whoever waited waited. But I don't want to take up too much time. But those are the interesting things that I've seen so far as of right now.
It's definitely interesting to hear your thoughts that we're potentially near that bottom. Um, I'm, interested to hear other panelists as well if they see it in a similar way. When I was talking this weekend, I spoke with Brian Shannon a little bit. He's at Alpha Trends on here, and he was, speaking about the really tumultuous position that we're in from a technical perspective within the market on, kind of it's going to break one way or the other, and there's a lot of worrisome downside, if some of these larger indices were to fall another few percentage points.
So can I clarify that statement?
Yeah, of course.
Yeah, so I'm saying that from a seasonality standpoint, you can come to a bottom. I'm not saying that this is the bottom. Like we've only gone down about 6%. So like the previous panelist said that Facebook's down 17%. You're getting like rolling corrections in some of these tech names, and some of these excuse me, some of these tech names are actually like performing as though they're in a bear market. But if you get like one last swoon where like people just want to just I need to be out. I'm gonna take these losses so I don't have to pay taxes, whatever the case may be. You kind of set up for like a retest of the 200-day, which is prior all-time high, And that really sets up nicely for year end to kind of like snap back. So that's kind of what I'm saying. I'm not saying that we're, towards the bottom
Got,
right now, but just setting up for one.
got it with the seasonality. That makes sense. Ben, you have a comment?
I was going to just add that if there's one thing I've learned over the past decade, it's you don't bet against Brian Shannon ever. He's about as sharp as they come. And in addition to that, watching the market today, I was watching IWO and it was green most of the day, even when the major averages were red, setting up kind of a triangle pattern there too, which we'll have to see which way it breaks, but basically has been flat for the whole year in a consolidation all year. But when you start to get more towards the apex of that triangle, usually means there's a bigger move coming. So we'll just have to see which way that is. But the other thing I noted, I'm watching rates today, and rates are down, and TLT is ripping, especially like the last hour into the close, and tech stocks are going nowhere. And I'm going, what is? And I even tweeted that, I guess it's the dollar, because the dollar was strong, and you got to, usually you're correlating something to why are rates coming off like this and tech isn't responding. And then after the close, we got the Apple news. So I always say somebody always knows. And then it all made sense. But it wasn't until after the bell when I was like, okay, now I see why tech didn't really respond, all day to what was going on in the bond market and rates. So anyway, tying that all together. And if you were on our spaces this morning, we're still in the window for that follow through day. So I don't want to get too bearish or too negative, because between days 4 and day 9, where today was day 5, that's in the window for that traditional can slim follow through day. It doesn't guarantee us a rally, but if we get one, no rally, starts without one. So we're again rather light volume, wasn't very heavy. So if we can get an up day where stocks are behaving well, it's not going to be hard to beat that volume if we get that, and then we get the follow through day, and then we can see if we can build on that.
Got it. Yeah, that makes sense. We chatted for a couple hours this morning about that timeline, I think, which you just outlined there. And then also, I actually haven't really looked too far into this Apple news, but I see now that they are being pretty heavily affected by that chip shortage, producing 10 million less phones than they thought. Their shares didn't slip too far. Do you think? So I guess in your perspective, Apple was kind of controlling that entirety of like the rates market and the movement there.
I think it was putting a lid on tech in general. It was just not allowing them to go, because normally, the last I checked, TLT was up like 1.8. What did I call it? 1.7%. Normally, on a move like that, tech's going to participate. And I kept saying, why are they not participating? There's nothing. Big cap tech normally, they'd be ripping too. And the fact that they weren't participating, I think that Apple news coming, I think somebody out there knows, or a lot of smart money knew that there was an issue and that news was going to break at some point. And it just kind of kept a lid on tech. It just didn't allow it to go, because normally we'd probably be up, at least 1.5% in tech with rates doing what they did today. And that just wasn't the case.
Yeah, that definitely makes sense. Guys, I do see a couple of hands up. I do want to just get through perhaps a few more of our speakers. If you could, feel free to keep your hands up. I am just going to call on a few that haven't spoken yet, but I'm happy to come back. I know that the topic was the rates and tech items. So to those that haven't spoken, I'm just going to give them a chance first, and then I will come back to y'all. Mel, would you like to go next?
Sure. Just piggybacking off of some of what Ben said. Interestingly enough, we're not really seeing, knowing that we have earnings on the horizon, and as we have some of these pullbacks, we're not really seeing positioning in options flow kind of suggesting and going further out. So it definitely is interesting to not really have what we would normally see to take us into an ER run up in some of the tech names. So very much not seeing that participation, or here we have this opportunity where we've had some pullbacks. This would be an area of interest for larger money to be put to work, and we're just not really seeing that participation. So just adding a little bit of context with what I'm seeing on my end with some money flow as well.
And what has the money flow been pointing towards?
Very very mixed. I'm trying to play a little bit of catch up, just because I did. You feel like you missed just a few days, and it's like, what happened? So trying to keep a little bit of a focus, not in general seeing that much, and when I say money flow, really what I'm trying to focus on is not that weekly activity that's going to be more from a speculative nature, but more action that's going to be with size, time, and urgency, going out a little bit. While we have these pullbacks, we have opportunities to be able to kind of capture some rotation. Do see the TAN names, the solar names, those have been catching some flow. Saw some software starting to get some nibbling in dark pool activity, not necessarily seeing the positioning and options. So keeping an eye on that. We had Workday, Chegg, Zen, Hubs with a little activity, and of course they made such a move off their analyst day. Net being an outperformer, so just trying to see if that's going to be an area where we can start to bottom and find some support.
Okay, I appreciate that insight. Vegas?
Hi, everyone. Good evening. I just want to agree with Mel, her comments on the money flow, because I did see some rotation a little bit today on the software sector too. And to Ben's comment too on the US dollar, I mean, kept hearing today on the news feed, US dollar trending by day highs. And on October the 6th, which was, I guess, last week sometime, it was year-to-date highs on the US dollar. And then we have obviously the FOMC commentary tomorrow. Been watching, the TLT had some flow also on the dark pool. So I've been watching this level here of around 146 to see if there's going to be some bullish momentum to the upside, or if we're going to see some bearish sentiment around under 140, 150. So I did see some dark pool activity even after hours, some pretty big prints, two separate prints. One was for around 43.5 million, and the other one was around, and both around the same time. So I'm definitely watching, obviously, TLT as well. So, just finding that, it's been a bit of a challenge to, trade in general. I find that there's been a little bit of chop, waiting to see if we can, once the chop conditions kind of settle down, are we going to be able to generate more momentum to the upside after tomorrow's event, or are we going to be seeing some choppy conditions maybe to the downside? So, I'm just keeping open-minded. And, to Mel's point, I did see some software strength in the softwares, did see some also the other market that she mentioned, the solar market, also watching that. And I saw some activity like in CLF, looked pretty good. And, Bitcoin plays, obviously we saw those take a bit of a hit based on some Bitcoin comments out there. And, we know what Bitcoin usually does, has those pullbacks. And then, of course, days later or weeks later will reverse. And then you'll see all these Bitcoin plays start to reverse as well. So just keeping an open mind on what we're seeing.
Interesting. So you mentioned TLT there. That's that iShares 20-year Treasury bond ETF. I'm not super familiar if people often do technical analysis on things like that. I mean, I'm looking at it. It's like a super interesting chart from a technical perspective with, coming up back towards the 200-day. There's a volume wedge at like 144. Is this something that you look at from that perspective?
I do definitely keep a watch. I mean, I will say today, interestingly, because I like to try to watch the money flow. I mean, I didn't really see any TLT flow come in till after 2 o'clock this afternoon. And throughout the day, all I kept seeing from the options flow, and maybe Mel can comment as well when she talks again, but I did see tons of flow coming through to the put side for the 144 puts on for October 22nd. So there was quite a lot coming through. So a couple weeklies for the same strike. 144 seems to be the number that they're all kind of picking as their strike number. But none of that activity was really evident until after 2 o'clock this afternoon. So not too sure what prompted that, but definitely keeping a watch on the levels I mentioned around 146, maybe, bullish sentiment, or if it goes under 140, 150, definitely keep an eye, because we did have TLT prints even last week as well, quite a bit.
Yeah, that definitely makes sense. I mean, if this got up to that 145, breaks through the 200-day, breaks through the volume ledge, looks like a nice movement up towards the 50-day at the 147 range, but perhaps a little bit range bound by another volume ledge at 149. It's interesting. I haven't really spent a ton of time on these type of areas, so I'm always intrigued when people are following the flow on them and looking for those massive, massive moves which you just spoke about there.
Yeah. Thank you.
Yeah, of course. Thanks, Vegas. Okay. So real quick, I am just going to go back to the two hands that are up, and then I'm going to go to you exclusive. Also, welcome Juicy Shark. So let's. I'm going to go to Andrew and Wolfie. Let's do like maybe a couple minutes of comments on. I know we're talking about tech, and then we'll keep that rolling. Wolfie, you want to go first?
I just have a quick one. I was just following up on what Ben was saying about, someone having a tell. What was like especially interesting with that comment and with like the action was semis couldn't catch a bid at all. So like a bunch of chip names were just trending lower all day. There's no like, there were some names like AMD was pretty much flat and Nvidia was pretty much flat, but like the price action was just trash. AMD got to a 20-day and just rolled, and then just a litany of all the other chips, especially the ones that are in handheld devices, were just trending lower all day, and it was just like remarkable to see at 359, like 50 that headline, and then just everything just kind of cratered to end.
Okay, appreciate the insight, Andrew.
Yeah, oh my gosh, there's so much to talk about. And I think all this stuff, like, a lot of it's related to the big picture macro. So along with the rates, along with the semiconductors, today we actually got a headline that came out this morning. I'll post it in the nest in a minute once I find it. But basically it was saying that some big semiconductor manufacturers, they had two big plants that were out of, basically, out of production, that were going to be coming back online in the near future. So I saw that, and I think a lot of the move that we've been seeing in the rates market is, everyone in the market is seeing, oh my gosh, we have the semi shortage, we have an energy shortage, prices are going up. If we get prices going up, that means higher inflation. If we have higher inflation, that means the Fed might have to hike rates quicker than we all expected. So the fixed income market is very smart, and they started raising the longer term rates and even the short rates as well to basically account for that fact that, hey, the Fed might have to take some drastic actions here. I noticed we got that news about the semis production plants, and then we also got some news today as well about the oil market, and some of these big, like OPEC, for instance, is talking about raising their production levels, which could help oil prices not, just skyrocket. So part of what I'm thinking as I look at this price action and the headlines that are coming out is maybe market participants are starting to price in some relief, with the chip shortage, energy shortage, etc. And think about it, the last maybe like 6 months, semis have been a great place to be because the main catalyst was, we have a semi shortage by the semiconductor manufacturers. Now we're getting the semiconductor companies, hitting their 200-day moving average, and the car manufacturers, that's another area of the market that has been seeing a lot of momentum. We have Tesla making some nice moves, bucking the trend in the NASDAQ. We have GM making some nice moves, Ford, even Tata Motors. And this is just anecdotal story. So my girlfriend, she has a lease that's due. She has a Mazda. We're going to go trade it in, go to the dealership. Let's do it. We'll trade in the old car, get a new one. We went to the dealership, and they literally have no vehicles. There's just no cars available due to this shortage. So like, boots on the ground, like we're really seeing the shortage firsthand, but it's making me think the market might be starting to look through the semi shortage, and that could be leading to a lot of this action we're seeing in the rate space, in the semis, and in the autos as well.
Got it. Got it. Thank you, Andrew. Also, I do see several people requesting. I do, unfortunately, I'm pretty much out of speaker spots because I think that I use both co-hosts, 9 speakers, and there is another person that is coming. That is why there are a few people in the crowd requesting who I do sometimes bring up. But just apologies to people because I don't want to like be removing people because sometimes that gets me like some real technical difficulties. Um, so real quick, Danny, I'm going to go to you, and then I'm going to go to the guys who haven't spoken yet.
Oh, yeah, I'm going to be like 15 seconds. How is nobody on FinTwit talking about CAR? Ticker CAR, Avis Budget Group. I see almost nobody talking about this. The stock is up 79% in the last 4 weeks. And I have it in a 1-2 setup in wave three. Wave threes tend to be explosive. That's exactly what it's showing us. It's coming to the 618 extension at 157. But this thing doesn't look like it's going to stop. And going to Andrew's point, the rental car, I won't even go into it, but look at what happened with the rental car market during COVID and look what's happening now. It's a really interesting, compelling story. And I'm really surprised I don't see more people talking about it.
Yeah, I've been seeing this stuff on the rental cars and the used cars and just all these interesting prices and several of the stocks maybe even hitting like short squeeze pumps. So I definitely think after I would definitely be down to dive a little bit more into that. Just want to see what some of these other folks have just general overall thoughts on the market. But thank you, Danny. That is a topic that we should talk more on tonight. Okay, exclusive. This is the first space of mine that you've been on. Welcome.
Yeah, thanks for having me. Hey,
Absolute
everybody. Good to
pleasure.
meet you. Yeah,
Great.
there's definitely a ton to talk about, that's for sure. I'm gonna piggyback off of a couple things that someone already said. I tagged a chart post that we did for TAN, the solar ETF, on the 11th at 11:13. So if anyone's familiar with our channel, we focus mainly on technicals. I'm the head option trader, but we focus on technicals. So if you're looking at the 23-hour chart, it was a really sure tell sign that the solar sector was going to launch a little bit because you had the 100 crossing the 50, you had a major retrace that was complete, and it broke through the 236, which is a really, really bullish sign. And if you look at the volume since September, the selling volumes per day was decreasing as the buy volume was increasing. So it was just there was a couple of technicals that led to, a lot of solar names, which a lot of our trades were in the solar sector. So that's what I wanted to say about that. So we definitely post charts for ETFs, stocks, meme stocks, you name it, we'll chart it. We look at it all. We just hit space bars on TradingView, so we definitely cycle through them quickly. But yeah, no, as far as some other things, I've noticed a lot. We're fairly new to the Twitter scene in FinTwit, but that's why we're trying to get a little bit more involved. But there's definitely a lot of rotation daily. So what I'm seeing is a lot of sector rotation. Like today, obviously big tech names got a little bit bearish, and then money rotated into the real estate sectors, into a couple other sectors that people don't really mention because it's not trending. And like he was just saying about CAR, there's a lot of stocks that have been performing that just not enough people are talking about, and that is a lot to do with these different bias that people have, where you have the anchoring bias and the hindsight bias and confirmation bias. So, a lot of traders, what they'll do is they'll look at these chart setups and they'll jump in at the anticipation phase versus waiting for confirmation, which is what we did on, say, the solar sector and the TAN ETF. We waited for that technical break. We had a couple of confluences that it was a sign for us to make a move. Despite what the news was saying, despite what CNBC was saying, whoever, we make unbiased opinions, and that's how we plan each of our strategies. So we're we talk about a lot of stocks, but I mean, I'm always game to come on here and talk about stocks and charting. I mean, charting is life. So I'm an option trader, so definitely agree with what a few were saying about it being a little bit more of a day trader's market versus a swinger's market because it is pretty volatile, much more volatile than the past few months or even years, really. So yeah, no, definitely glad to be here.
So I know that you trade a lot with stop losses as well. We talked about that. So I guess is there a major difference between if you're setting these type stop losses, is there a major difference between the day trade to a swing trade of a few days if you can get stopped out regardless, but you can kind of take that profit at any point as well?
Yeah, so there's a couple of excuse me. There's actually a couple of approaches we take, especially when we're talking to our members and just answering questions on Twitter. So there's the short term and the long term stop. You have to decide first of all what kind of trader do you want to be. Do you want to be a scalp trader? Do you want to be a day trader? Do you want to be a swing trader? So that's the first step. The second one, like I was talking to you earlier with the stop losses, I'll have my trigger level where I enter a trade and I'll take my profit. I don't care if it's a 5%, 20%, 10,000% like on GWH today. If it's a profit percentage, I'm going to take my profit, set my stop loss at my entry or above, and just use a trailing. So a lot of people forget to claim profits because they're looking for the bigger wins, and small wins, they really do add up. So that if you're looking for the swings, you want to look at daily and weekly charts and longer intervals because I'm noticing a lot of people are posting charts with 3, 5, 10 minute candles and they're setting stops on those candles, and it's really, you can't have short-term candles with high rates of conviction if you're making these swing trades. So it's better to use SR levels that are based on longer time frames for the candles and the charts and the moving averages. We don't really use a lot of indicators, but we definitely use on the daily 8 and 21 EMAs, and then the standard 50, 100, 200 MAs. So there's in golden pockets. That's our biggest thing too. That's usually our main confirmation and support. So
Awesome, awesome. I appreciate it, exclusive. I'm gonna keep the ball rolling. It's great to have you here. And once we get through the next few of these people, the way I'm just gonna run this conversation is just by raised hands. So, if you guys want to pop off of each other, that would be perfect. Juicy, it looks like you made it to the crowd. What's going on, man?
Yeah, sorry about that, and I'm gonna have to leave after I speak. Just in between a family emergency, but love all you guys. I just want to say, keep your head up. And what have I been saying every time I've been on these spaces? We have been in a volatility day traders market. I know you've heard it out of everybody's mouth here, but I just want to tag along onto something. You got to go back to your edge, all right? So two things. One, you need to play defense in this market as a day trader, right? I'm just speaking for my day traders. We are not, I want to piggyback what the exclusive is saying. We're not just trying to get in here and get those big gains so we can go and FinTwig and brag about it. Right now, I'm telling my members literally, once you're up in this market playing defense, once you're up a certain percentage, just move that stop to break even, right? And trail it. And if it comes back and stops you out, you get stopped out for a 10, 20, 30% gain. Fine, take it. Let it add up because the market's really not giving a lot of opportunity. Now, the next thing is you guys got to work. If you're taking losses, you got to work on getting in front of the right stocks. And you can't do it right now in this market without a scanner. You need some form of scanner in this current market. We was able to catch some of the solar sector on Thursday with First Solar, literally in and out that one trade. That was it. Today I took Tesla twice. Once was like 2%. The other was like 6%. Done, right? So this market right now, just let me give you another tip. Focus on the biggest skill that's needed in trading, which is not trading, right? We get so addicted to this and we want to trade every day and catch every move, but we really forget, especially new traders, there's a time for you to be cash. There's a time, especially as a short-term trader, there's a time for you not to do anything. And a time would be now walking into FMOC tomorrow. You got OPEX on Friday, not the monthly OPEX, but you got OPEX on Friday. So the outlook for the rest of the week is kind of sideways. So for me, I'm pretty much scanner, small gains, letting them stack up, just playing defense and waiting for all this stuff to clear out so I can get aggressive.
Always preaching wisdom, man. I hope everything's all good with the family. We appreciate you hopping in here. And you're welcome, obviously to stay for as long as you can.
Anytime, family.
Of course. Shark, what's going on, man? You've been patient.
Oh, all good, all good. Hey, I want to give a shout out to Juicy. Hope all is well, brother. And I actually piggyback on kind of what he's saying, right? In this market, you got to have a strategy. In this market, you got to kind of, for new traders, you got to know what you're going to do, right? So if you, just like a lot of people, I guess, reiterate on what a lot of people are saying here is, you got to know, are you a day trader? Are you a swing trader? Are you a long-term investor, right? If you're a long-term investor, don't be looking at the 15-minute candles, right? If you're if you're intraday, right, maybe you shouldn't exactly be necessarily focused on the weekly stuff right now or the monthly charts, right? You just got to be focused on what your niche is or whatever it is. What's I love about the market, first and foremost, is everyone looks at it differently, right? For me, I've been kind of preaching for my community to be kind of all cash since September, early September, just because historically, we know that September is a rocky month, and then there's just a lot of economic catalysts, right? Just like we talked about with Juicy, right? CPI is tomorrow, right? Feds are going to talk again in November 3rd, I think. So there's just all these. It's kind of like what I said to somebody earlier when we were just kind of chatting. Is like, if I was going to take the boat out, right, in the ocean, right? First of all, I'm not going to take it out if I know that there's an impending storm coming, right? That could possibly happen in November. And at the same time, there's just a lot of rocky waters. So for me, I'm waiting for things to kind of smooth out, right? But at the same time, if you are looking maybe for some, just actually like Danny was talking about, some unconventional plays, that's kind of what we did. And what I love is no one talked about it so far. So in our community, we played uranium, right? And we had a fucking great day on uranium today. So if you just, like Juicy said too, you got to make sure you're looking at the right stocks. While the market is having this indecision, there will be other secular plays, especially energy. We've talked about, everyone's talked about solar, and then uranium was freaking on fire today. I don't know if anybody saw that, but there are these plays out there that if you're only looking at the market from a bullish side, will still give you those intraday daily plays. But for me, I've told people before, I look at things from both perspectives. I'm a trend trader, right? And the trend right now is not bullish. And that's just in my eyes, right? Everyone is different, but in my eyes, the trend is not bullish. But there are other things that are, like, perfect example, like Danny talked about, I think, CAR. CAR just had a TTM squeeze the other day, and it was amazing, I think, on the 24th. And so on September 24th. So there are these plays that, will have nice price action, and then when other people see the price action, it will almost just kind of continue, make this a continuation kind of uptrend for those ones. I'm not saying in the sense of a long time, because right now I'm in and out. I am right now a day trader. I'm not holding anything long term because of all the the economic catalysts out there. So I just want everyone to know, if you're out here listening, be safe, but know what you're trying to do right before you're getting into any trade. Like, before I get anything, I always have a stop loss. I make sure I have my targets, and I make sure that I'm not going to break my rules. And being disciplined in this environment is really one of the main ways to stay successful and keep making sure your portfolio is gaining, or at the same time holding cash and wait until a trend that is in your favor. So that's it.
Well, right as always, yes. Yeah, it's been parabolic there with that move, but absolutely. I think, you and Juicy were on the same page. It's not about just, placing a ton of trades, but really looking and finding those right ones. And, we did I think the first technical analysis space that I did together, we were both on, and you spoke about, when you come to the market, it's all about coming with a plan and having, your target and having your stop loss, and not just trying to figure out, I'm going to sit down, I'm just going to find something and I'm going to trade it, but really putting the homework into it. I know people, this morning we had Richard Moglen on. The guy wakes up at, like 4.5 hours before market open, or maybe even a little bit earlier, and just make sure that he has his, spreadsheet and everything ready for the day. And I've seen yours, Shark. I think you've gotten the graphics a little bit better from the days of Excel, but it's just, continues to impress as you put together the different areas. I am going to keep this ball rolling, but real quick, I think we have about 500 people in here. Yeah, a little bit more. And if you're enjoying it, we did this last week, and I think, we're going to try to make a reoccurring thing of it. We also have someone that's recording. If you're enjoying it, I just highly recommend, these speakers are a really, really great group. I've come to learn from them. I actually got to meet a few of them in person this weekend, which was really, really cool. And, can super vouch for everything they're doing. We got a couple people on here with 100,000 followers. Some of the people on here that just have amazing trading techniques and styles. Mel with the dark pools and Shark. And obviously, I think it's a very technical focused space. But I just would say, if you're going to be chilling on here, we're going to be talking for a little bit. We still have some secrets for everything gone. We're going to go into some individual names. Take the moment to click in to some of the people that are up here, and I just highly recommend giving them that follow. It's worth it, right? If you absolutely hate the content coming off your timeline in a week, you can unfollow, but it's completely free, and they're doing it out of the goodness of their heart. So I think that it is absolutely more than worth it. Okay, real quick, just because there's two more people that haven't gone, I'm going to go to them, and then I see hands up. Stock market news. You've been chilling, man. What's going on? How's your week in the market?
Yeah, what's up, man? I appreciate you having me. I'll keep it pretty quick and let us keep it moving. I'm not too much of a trader. I'm definitely much more of a long-term investor. And, as most people have said here, I feel the chop. It feels like we're in that in-between area. I've really put all my focus into the news and everything like that. A tad bit or two. The Apple news that came out today about the 10 million iPhones. I saw a tweet that came out. I don't know 100% how true it is, but it felt like it could be. But it's talking about how big of an EPS hit that's going to be for Apple, and it was 12 cents, which, it is something, and the stock should move lower, but that's not much, and you can kind of see why 1% definitely makes a little bit of sense. With the Cathie Wood thing, which Wolfie was talking about, I have definitely noticed it. I do run an account that tracks her daily activity, and I've definitely seen that it is now, we are in the period where it's cool to hate Cathie. And then just one thing, when I'm thinking of just kind of putting my technical analysis hat on, putting my whatever day trader or whatever hat on, one thing that was fascinating for me was more in the crypto market, and maybe we'll talk about this in theme, maybe I'll save it, but I'll come back to it. But how Bitcoin it's pulled back a little now, but it was breaking out a little bit. It moved from 55 up to 57 up to almost 58K, and Ethereum and a couple of the other cryptos, stayed down, which was kind of interesting to me. That this definitely has happened in the past, but most recently it's felt like all crypto has moved together. So, it's fascinating to see it kind of maybe decouple from each other a little bit, but we'll see. And yeah, I'm definitely here to hopefully add some stuff. I included, we were talking about the semiconductor factories, and it was Intel and Samsung that were looking to bring back their factories by the end of November, which I pinned up in the top as well. I don't know who was talking about that, but I'll look to add stuff like that in this, and yeah, keep it moving.
Awesome, man. Yeah, everyone can check out. There's already several pinned posts. Also, a good thing to catch kind of, just scroll through. I see some stuff about AirKK, about Roku, one of the ones that we called out last week, Intel, SpaceX. Sounded like you had a specific Stock Talk Weekly that you wanted to chat about with us.
Yeah, I had a couple. I just wanted to talk about the space sector in general, but I don't know if it's appropriate to do that now or if you want to do that later. It's up to you.
Yeah, man, go ahead.
Yeah, no, I mean, I just wanted to talk about what I think is, beginning to be an emerging opportunity in the market. Kind of piggybacking off what a few people said earlier, just to comment on the general state of the market. Even when the market's in the downtrend like it is now, there's always runners. There's always either theme-based opportunities, float structure-based opportunities, which we've seen recently with a lot of these, de-SPACs with high redemption rates running. We saw that with GWH today as well. It ran, I think it was up to 180% today. But in any kind of market, there's always opportunities. Even in a very bullish market, there's downside opportunities. There's really good plays to play short on. But themes and novelties, really tend to ring when the market is choppy because people are looking for, interesting plays to chase. And, whether that's a really low float, small cap stock with, a cheap price per share that, can warrant a lot of hype and attention, that happens a lot. But, themes especially have been working for me, at least trading wise. This week, I think it was Shark who mentioned it about uranium being hot. I traded some uranium stocks this week. That went very well. Lithium stocks got hot earlier in the week. There was some rebound in iron ore prices and coal prices that sent some of those stocks flying. And so there's always a narrative to play and a theme to play. And, if you just pay, a bit of attention to the news, you can find and access some of those sectors and realize like most of the news in the world has some kind of related stock that you can trade. And that's not the case in all cases, but in most cases, there's some kind of related stock you can trade. And so, news-based trading works really well for me in a choppy market because, it gives stocks a reason to run against the indices. And, for new traders, keep in mind, like the indices are just an aggregate overview of the stocks that are within them, right? Like if an index is tanking, it doesn't mean every single stock in that index is going down. So, that's important to keep in mind. But, all that being said, what I was really talking about was what I feel like is an emerging opportunity in the space sector. And, a couple of companies have gone public related to space and satellites over the last year and a half, 2 years. Most of them have been satellite-based plays, which, satellite-based stocks have been around for a while. There's a number of names that people have traded for a while, but looking at these newer opportunities, a lot of them came forward at really inflated valuations last year. And SpaceX last week, which I thought was really interesting, did a secondary share sale that valued them at $100 billion. I pinned a tweet, by the way, above. I don't know if it's the first one or the second or third one, but it's kind of related to this topic. But essentially, SpaceX got valued in a round of private funding last week at $100 billion. Now, obviously, SpaceX doesn't have the current revenues to justify that. They're just by far the leader in the space. And I think this is kind of showing, an appetite. And keep in mind, private funding rounds don't always correlate to public market value. There's generally a pretty big discrepancy there. But regardless, seeing SpaceX get that valuation at this juncture is kind of raising the question, which is always raised in emerging industries, of like, what are the appropriate multiples to value these companies at? Like when you look at legacy sectors and industries that have been trading forever, there's typically, a multiple that a lot of the companies in that space are trading around. And, usually the sector leaders are trading at premium multiples that, are justifying their leading that sector. And so, I don't expect any of these small cap plays to run to the multiple or near the valuation that SpaceX is trading at. But, I think there are some good opportunities. RKLB has been a great trade since DSPAC for those who have been playing it. But currently it's trading at a $6 billion valuation on 60 to 70 million revenues for the year. So that's nearly a 100x multiple on current revenues. Now, will it hold that valuation? I don't know. But even if it doesn't, even if it trades around there, right? You have to look at RDW, in my opinion, Redwire, which is a stock that isn't really talked about a lot on FinTwit. There's been, some conversation volume recently picking up around it because of the Amazon partnership rumor. But, I've been tweeting about the stock for almost a year now, or since it's come out. I don't know when it exactly came out, but since the deal was announced, I've been tweeting about it, and it didn't get a lot of exposure or, hype during its SPAC phase or even right after the de-SPAC. But at this juncture, Redwire is trading at less than a 600 million market cap with 160 to 170 million revenues this year. So that puts them at a 3 to 4x multiple compared to a 100x multiple for Rocket Lab, which also has other, concerns like launch risk, and all these things that factor into these companies. As we've seen, people saw this with Virgin Galactic, even though that's not necessarily a quote unquote, deep space company. But, Virgin Galactic, their entire stock traded around their launch dates. And Rocket Lab, you've seen the same thing. Their launch dates are the main catalyst, and the stock trades around those launch dates. With a company like Redwire, you don't have that launch risk. They're involved in almost every sector of the space race. So they're supplying, satellite solutions, guidance solutions, parts, basically everything you can think of. Think of them as the Amazon of the space race. They're providing all of these companies, with a wide range of products and services. And that makes them winner agnostic, which means they don't care who the biggest launch company ends up being. I think it probably will likely be SpaceX. But even if it isn't, it doesn't matter to them because they'll scale with the sector. So you're talking about a company trading at 3 to 4x multiple, like I said, winner agnostic, cash flow positive already. And, they've just announced a NASA partnership for the lunar mission and, for the Jupiter mission. And, there's a lot of near-term catalysts and partnerships that I think can really drive the value. So, I could go on and on about it, but I think it's a really, really undervalued, overlooked stock, compared to most stocks in that sector and other, high multiple, high growth sectors. It's trading at a very reasonable, 3.5x multiple of current revenues. And there's also an Amazon partnership that's being rumored based on an investor's call with their lead program manager, who basically directly said that within a month they should expect news of an Amazon partnership. So again, I can go on and on, but it's a stock that I really recommend people to look at. RDW, obviously make your own decisions, make your own thesis, but I think it's a very, very compelling value in a high growth space that also has a lot of hype and interest. Sectors tend to trade up based on how sexy they are, and space is a sexy sector, so I anticipate that there'll be interest in it going forward. And that's one industry that I think is, you can tag and bag it as a definitive inevitable growth industry, kind of similarly to electric vehicles or online gaming and gambling. Like a lot of these sectors that have emerged with a whole ton of new stocks this year and last year, space I think is going to be one of them for sure.
Hell yeah, man. It's clear that you've done your due diligence on this area, and I know Evan's pretty passionate about the space industry as well. We often end up talking about like SPC and some of these others. To see that, immense valuation of, what was it, 100 billion, right off the bat, it's crazy. It's crazy. There's clearly a lot of money being funneled into this area. Clearly somebody like Elon Musk has access to it, and access to the right people that are going to be putting it there. So, I'm all about it. I'm excited to see it continue. Excited to see these things, IPO, gain more access to the public. Not only are we going to space, but we're investing in going to space, as ordinary retail people. So it's pretty interesting, to see that. Appreciate the, in-depth analysis there, Stock Talk Weekly. I am going to bring it back. I know that a couple of people had their hands up from, I think, the previous point, but I'm absolutely happy for you to, stay on and continue to add, with that depth. And if anybody wants to discuss the space one, happy to discuss that as well. Sounds like we got cars in space so far. Now we just got the cars. Now we just need to get to flying cars, somewhere in the middle ground of those two. Exclusive.
Caught me laughing. Yeah, if I'm being honest, I forgot why I raised my hand. It was a while ago, but it was people forcing trades against what's trending and what sector is performing. So if you see, and I'm going to piggyback off I forgot who said it, but someone was talking about how just because an ETF is down doesn't mean that the entire group of names are going to be red. That's when you have to strike on the name that is performing in that sector. Like if everything in the EV sector is red and Tesla's green, then obviously Tesla's the trade to make in that sector. And you find if you see an entire sector that's red, look for a sector that's slightly green or performing and volumes increasing, and that's where you should shift your focus to. So, counter trend trading is a really low probability way to trade, so your chances of succeeding go down significantly. And that goes along with guessing the bottom or the top. I'm obviously a bull trader, so I like the upward trends versus the downtrends, but I also like the downtrends because when they break, that's when I can make my move. So you have to be able to read charts in both ways and make the trades in both ways, because you have to adapt to both conditions. You can't just be a one-trick wonder. It's got to be always adapting, always learning. I've only been training for about 10 years, but I'm always learning something new every single day. And if you're not learning, you have to surround yourself with people that are still learning, and they can teach you something too. Another thing too is a lot of the issues with members and people I've talked to in real life, a lot of issues that new traders particularly have with succeeding in the market is because they're not believing in the trades that they make, either because they didn't originate the trade or they don't know why they entered the trade. experience comes from making mistakes. So of course you're going to make mistakes along the way, but as long as you're journaling your trade, you understand why you made that trade and it didn't work out, that's how you grow and that's how you improve. And then you celebrate the small wins after you make that educated decision, to learn how you made that wrong trade. So always self-improving. Every night I do it. I was doing it before the call. I was reviewing my trades for the day. There's always going to be red trades. I particularly have a lot of conviction trades. I think my all-time win rate for my options is about 93 to 95%, and that's only because I make a trade when I have confirmation. I don't buy into a trade before I know it's either going to go a little bit in my favor or a lot in my favor. And some trades that do fail are covered with profits, whether they're big or small, from some other trades that I've made while that trade is starting to work. And if it fails, then I've already made the money back for that trade that I've made. And that kind of ties into the next tip for newer traders is if you're spending $1,000, $10,000, whatever have you, if you're buying into a trade for $1,000, okay, I see a lot of people, they set stop losses at 20, 30, 50%, and they panic, and then they sell their position for a loss, and then the stock goes back up. The bears have liquidated the people that are, they're stop loss hunting, and the trade goes back to green, but you've already stopped out of the trade. So instead of investing $1,000, cut your position down 30% or 50% and trade with that amount of money, or diversify into 2 separate trades for $500 apiece. That way you're, the saying, don't put all your eggs in one basket. You can diversify your portfolio on day trades, swing trades. Any long-term investor will tell you have to have a diversified portfolio. And that's one of the best ways, and that's how I've been able to be successful as a trader, is by not putting all my eggs in one basket and waiting for confirmation. The last thing I wanted to say, too, before I pass the mic was having conviction in your trade. So we post, we call them exclusive triggers, but they're just, SR levels that we think are going to be triggers both psychologically and technically. So, for instance, Facebook. A lot of people were riding the wave up before it went back down. We had triggers for calls and triggers for puts for those who are option traders. And puts is a short position. So when it hit 327.10, that's when we entered our puts because we're not biased. The call stopped out, so now we're going to play puts in the other direction. And those are the kind of things that you can set an alert. Every charting platform has the ability to set an alert. You can set them on your phone. There's Discord bots. You can set an alarm on your phone or whatever have you to look back at the name, but don't make a trade and forget about it. If you're going to have conviction in a trade, you have to babysit the trade and make sure it's performing and at least cover the position in the worst case scenario. Because if you think a trade can't fail, you are lying to yourself. Every trade can fail, every single time. But the point is to make other trades to cover it. So I don't want to ramble, but yeah, pretty much just cover, losses with profits from something else. If you're going to use a stop loss, then just use less money. It's the same thing.
Awesome. Appreciate the insight there. All right, my good friend Doug just hopped in. What's going on, Doug?
Bold of you to assume we're good friends, but yeah, we're friends. No, I'm just kidding.
Whoa. I have the screenshots to prove it, Doug. Don't let me pull out the DMs. I was told I was
I'm kidding. You're a good man. What's going on?
We're just chatting about the market. This is a pretty, I guess, technical theme space. We don't typically chat technicals with each other, but just general thoughts on where the market's going. Seems to be in a pretty pivotal point when you look at things like SPY and the Qs. When you look at stuff like volume weighted average price, there's buyers and sellers are both kind of leaning off the edge of the cliff and seeing kind of who's going to pull back first. So, would love to get maybe, your thoughts if you've been watching it. If you've been too busy watching crypto, I understand.
Unfortunately, I'm busy watching just about everything from the capital markets to crypto to pixelated squids. There's never enough. Yeah, this obviously isn't my cup of tea, doing technical analysis, and mad respect for you guys who are doing this and getting in and getting out and hopefully making money on it. I tend to take a more macro view of what's going on and have to deal with what my clients' needs are. So broader market themes, things I am keeping my eye. So I agree with what you said in just that short snippet here. It does seem pretty pivotal. It does seem like there's mounting information as to whether or not we're really going to see broader effects in the economy. I'm alluding to inflation. I'm alluding to higher prices, what we see happening with supply, whether it's chips, computer chips, or just things getting caught on boats. It'll be an interesting finish to the year, to say the least. I feel like the Fed is just doing everything they can to continue bond purchases and keeping rates low. I think that part goes without saying, the latter, not the former part. So your guess is really as good as mine, but it doesn't feel like a market that's just so pumped full of liquidity that it can only go up and to the right. Obviously, markets don't really work like that, but man, did it sure feel like that for an extended period of time. So I think that's my 5-second or more, macro take on where I see things. And, again, to be real with you guys, I'm constantly focused on taking very long-term approaches to investing. Most of my clients are in their late 20s and up to late 30s. So extremely long time horizons to invest, can take very disciplined approaches, probably are more concerned, whether daycare is open, to take their little kids so they can get to work and make money and put it away to execute on their goal. So yeah, I mean, just completely different, not any better or worse, just completely different than, looking at moving day averages and seeing if there's breakouts on charts for specific stocks. Like literally right now, I'm allocating a client's 401k. And of course, it's just like, a risk adjusted Vanguard portfolio. What else are you going to do? Very boring for you guys.
So you're telling me you don't day trade for each of your clients?
What do you think?
Well, I know you're day trading some Dogecoin in the back of the office over there, so I'm not too worried.
No.
I think that they're in good hands.
Yeah, man, they're in good hands. No Doge trading here. I've definitely been sucked into the NFT world here just for fun. But when it comes to the client's money, it's again, behavior over pretty much anything else. Getting savings rates higher. I'm just your good old financial planner here, going with your very very boring yet disciplined takes that work over longer periods of time. And I probably am dealing more with what's going on in their lives on the week to week, the month to month, job changes, career type stuff. But certainly there's plenty of folks that are trading and do run opportunity portfolios or have us take a tactical approach to investments. I'd be lying to you to say that was the lion's share by any measure, but it goes that way more and more as the firm grows.
What percentage of a client's Roth IRA do you recommend allocating towards NFTs?
I can't recommend any of that, so we're gonna go with a good old goose egg percent there. But I could see a world where clients' retirement accounts or qualified dollars are getting crypto exposure. I mean, sky is blue. Very, very frustrating environment when you're pro crypto or pro decentralized finance and you want to find strategies to, incorporate that into client portfolios, yet you don't really have a good regulatory landscape or a very practical business landscape to go execute on that. Hopefully that will change within a 12-month period.
Okay, very fair. And to everyone, I'm just throwing a bunch of questions at Doug because we haven't gotten to speak in a little while on his face, and it's nice to hear your
No, I
voice.
appreciate the love and throwing questions I can answer here, because if you had me check out the CAR chart, I would be like, geez, I don't know. What copper? I'm looking at these tweets up like copper. I don't know.
We should get is it Joelle in here? I'm sure she knows.
See, it's funny. Her name is actually Heather, but on
Heather.
Twitter she uses her pen name of Joelle. It's kind of amusing to me how many people just straight up believe her name is Joelle, and I could see why.
Well, her username's Average Joelle, so She's kind of leading us on.
Well, that was her middle name actually is Joelle, so we got that going, and the average, Joelle is a pretty clever play on words. I'll give her that.
All right. Well, listen, it sounds like you got the power duo going on. She's got the individual stocks covered, day trading.
But
You've got the
lastly, I'll say this because I'm sure there's plenty of other people who want to speak. It was great seeing you in Florida doing the thing at the convention or your conference. I loved seeing the pictures out of there, the booth, doing all the right things.
I really appreciate that. We're going to have the full recording actually of FinTwit conference is going to be available to the public for free. Should be out at the end of this week. I'm really looking forward. I did a big power pitch on stage. I yelled "What's up, party people" at the top of my lungs to start it off. It was very exhilarating.
Yeah, man, these are things that you will forever remember and cherish. I look forward to seeing you do more big things like that. It was really, really great to see you take that initiative, put something together for the community. Hats off to you. Again, you love to see it.
Appreciate that, Doug. All right. Thank you, sir. And you're welcome to hang out. If you have any, thoughts or input, just feel free to raise that hand. I'm going to keep the ball rolling. Also, for anybody who's curious about what we're talking about, I did pitch Wolf Financial this weekend. Our big announcement was on the Wolf app, which is actually in my bio, wolf.financial. We are introducing a trading platform. So we're right now a social, finance app where you can come and you can do socialize and research, kind of like FinTwit on steroids. And we're actually adding in the ability for trading. So that should be coming in this week or next. And then we are going to have low-key some patented processes that should make it advantageous to trading on our platform. So things for you to see in the future. But if anybody wants to make an account, shoot me over a DM that you made one. I would love to hear from you all. And I interact on there as well. Okay, I'm going to keep the ball rolling. Sorry for the delay, everyone. Andrew, I'm going to you.
Yeah, sure. So, in terms of my background, I grew up in a pretty similar environment to what Doug is talking about. Where, I started off at Vanguard and I was in the retail investor group, helping allocate clients' portfolios, all that good stuff. And yeah, those clients are not really interested in the day-to-day action of the markets. And it's super interesting because it seems like within our group right now, we have all these different flavors of investors. We have some day traders in the group, swing traders, position traders. I basically made the transition, from like big picture macro asset allocation when I was working at Vanguard. And when I started working on the fixed income trading desk, I got way more into active trading. So what I do now, and especially with my trading group, Pristine Capital, is my approach is pretty much somewhere in the middle. Like I do use technical analysis as my primary tool. The price in the market, the volume and the volatility to me are the most important inputs. But really what I'm looking for are big picture trends, mega trends essentially. It's like I know a lot of people are talking about how in this market environment, you really have to be like in all cash. And yeah, I definitely think that makes sense. Like if you're, a day trader or if you're a new trader, like if you're like everyone has their different place on the learning curve for trading. A lot of newer people, even more seasoned people, like if risk control is not really your strong suit, then yeah, as soon as the market gets a little bit dicey, like you have to protect yourself and you have to get out. But what I'm finding in this marketplace right now is that there are a couple of, bigger picture trends, that look awesome. So one of those big picture trends is cryptocurrency. And yeah, we have the potential for, I believe it's 5 ETFs to be approved by the end of October. So we have a bunch of these approval dates. I'm going to share them in our group in a moment. But yeah, there's some approval dates coming up in October. I see ProShares has an ETF. They're trying to get through Invesco, VanEck, Valkyrie, Galaxy. And to me, it's not really a coincidence that cryptocurrency and Bitcoin especially is really running. So like for me personally, I'm not going to go like, oh my gosh, the FANG stocks are down. Let me sell everything I own. Now I have to get out of my cryptocurrency exposures as well. For me, it's like, this is essentially a mega trend. I want to make sure I'm keeping my exposure here. And, a group in the market like financials, we might be in a rising rate environment, for the remainder of 2021 and maybe even into 2022 as the Fed tapers. So, like for me, for instance, like, okay, I want to have some exposure to the financials as well. So I think everyone definitely has like a different style and just like a different way of controlling your risk. But for me, so long as I have my out point, just in case the trade goes against me, so long as I'm managing my risk properly, in a market like this, where we're kind of chopping around and really moving sideways, and there's a ton of fear in the market, and I'm starting to see the volatility coming out of the market, and I'm starting to see dark pool buyers getting more active, to me, that's a market that, I can have some involvement in. I'm not really going to be like going crazy with, a lot of short-term risks. Like for instance, like the solar energy, that's something that, with my system, like I'm not really going to be like chasing after those stocks, after like a 2-day move. But if you're a day trader, that was like, you're probably eating a steak dinner tonight if you caught that move. So yeah, I think it's all about just knowing like who you are in the marketplace and what your style is. And if you're sticking with that, you'll be in good shape.
Absolutely. Appreciate the insight there, Andrew. Okay, real quick, Evan, you had a question?
Yeah, I mean, it was a question for Doug. I don't know if he kind of went away, but it was just kind of on crypto on that topic there, and it actually kind of maybe fits into the ETFs. But like when a client does come to you, which I imagine when you're dealing with 20 and 30-year-olds a bunch do, asking to get into crypto, where do you currently send them? Is it just GBTC and ETHE, or is it somewhere else, or is it just like not even allowed to?
That's a really great question. And it really is a matter of education versus allocation. And I think advisors who want to be in the best position to help their clients with crypto will understand that, fundamentally, and take the time to understand what they can say and what they can do and what they can't say or what they shouldn't do. And I feel 9 out of 10 times, it's simply a matter of just being comfortable with the subject matter, in this case, crypto. So what I'm noticing more and more than, let's go over a 4-year time period where maybe 1 in 10 prospects would have exposure to crypto or be asking about it. That is now somewhere in the neighborhood of 40 to 50% of prospects coming in that demographic with exposure, or existing clients that are now asking pretty heavily about it. Now, to answer your question, what can you do? Again, educate. You can teach them about exchanges, about blockchain technology, about different cryptocurrencies. You give them the ins and outs. Where else are they going to get it from other than, doing it themselves? Yeah, but they pay you a fee to get advice and to understand things. So again, being comfortable and knowing this is not only going to build value with your clients, but you're going to help point them in the right direction. So you get through this education process before they would even allocate any of their money. And then they might say to you, well, look, so I'll take a quick step back here. I'm not, and I think most investment advisors are not at the point where this is, again, how they've set up it, primarily based on how they've set up their business and what they're comfortable with doing. But there's no real guidance here to solicit the purchase or sale of crypto. And I know there are trust, you got, Grayscale and Osprey and very, very easy, familiar ways to do it. You got people even going as far as buying, MicroStrategy, and then you see really diluted plays, whether it's, Tesla or Square to get Bitcoin exposure. That's not really it. But, again, read between or understand the fine line here of being able to educate your client of where they can do it, how they can do it, and the differences between doing it at Coinbase versus Gemini, self-custody versus someone else having the keys. From my perspective, that's where the value is for advisors right now. And to the person who was just speaking about there being, 20 EFTs, might have one by October. Dude, God willing, I hope that's the case, because for me, who, for $100 million in asset firm, that's not a small amount of money, but relative to multi-billion-dollar RIAs, it's a drop in the bucket, and they're even small relative to how big institutional money managers can get. And, just for me making, they might be able to pull it off. They might be able to self-insure or handle the risk of soliciting that, or going off what they believe is the guidance being given by the SEC. I can't afford, to be audited or questioned and take my time away from growth to allocate 1 to 5%, practically speaking, across a book of business. Again, it's just not a practical business thing. Pivoting back to the ETF here, that's the big green light. Go for it for RIAs. How many times have you seen the joke on Twitter? Great, so I can lose 95% of my money on a 2x levered small cap emerging market or VIX fund, but I can't have a 1-to-1 on Bitcoin. So that's really where I'm going. I hope that answers the question. You can be extraordinarily helpful. You can provide a ton of education. There are so many great resources out there that I've seen across the board. I'll rep OnRamp. They do a great job of providing fact sheets and tools for both clients and advisors. One pagers, fact sheets, all the information you need. They're not the only ones doing it either, and I think that's where the emphasis needs to be. Now, I've seen, and I'll finish with this. A client comes to me, says, "Hey, I'm thinking about buying a whole Bitcoin," and it's like, okay, let's discuss that. Let's first understand what we're talking about. Let's understand, what that looks like in the context of your overall portfolio and your goals. If it, let's go to extreme settings. What if it goes to zero? What if it doubles or triples? If you're a good financial planner, you can take that information and start to show outcomes, relative to financial goals. Now, if you're doing this for clients and able to have these educational conversations, it's not it doesn't matter if you're the one allocating to it, unless you're so concerned with being able to bill on it. So that's really where, and yeah, I think, I would love to be able to recommend it, put it in clients' portfolios. Yes, I'd love to be able to manage it and bill on it, but again, practically speaking, just not there. So again, it's an educate versus allocate. Advisors, anyone looking to really have a amazing value proposition above and beyond what they're currently doing, just get educated in decentralized finance, and you will find yourself instantly ahead of the curve with what's about to happen here. We're building an entirely separate decentralized financial system, and its rails alongside of traditional financial system. That's probably the most exciting thing I can think of since the internet. Hence the opportunity here to first and foremost educate yourself.
Awesome. Thanks, Doug. Appreciate the insight there. I think that there's probably plenty of people in the crowd that are in that similar boat, of people that are coming to you. Okay, keeping the ball rolling. Vegas.
Hi guys. So I just wanted to just comment. Last week when we talked on Twitter Spaces, we talked about General Motors had a nice run since our last talk, and so one of the ones that I've been watching that we can keep your radar on is Ford, because I'm noticing a lot of flow coming through on Ford, and it had actually a really good trading day today, and I was seeing a lot of dark pool flow on Ford in particular, and seeing a lot of flow in particular for the November calls, either the $15 strike or the $16 strike. So it does look like it is in the bullish sentiment at this point. It's over that 1550 level. So from all the dark pool prints from last week and even this past week, we are above a lot of those levels. So that looks like a lot of those transactions were buys. So definitely one to watch for the rest, for a longer term swing. And another one I'm watching is just ExxonMobil. Seeing a lot of flow on that one yet. Still waiting for confirmation if it can get over 62.50. But I would say Ford is one to take confidently, or one to check out and see if you're interested in something as a swing trade or even a short-term swing. There's been a lot of great flow there. So it seems that the car sector has been doing really well between GM last week, and we saw the movement even this week, and now we're seeing a lot of activity in Ford. So those are my thoughts and some ideas that you might want to check out.
Absolutely. I know I think, going to dive a little bit more into the car sector. So I'm going to go to Wolfie and then Special to continue a little bit on that.
That was like that was like the best segue you could have thrown. I was gonna tell Doug, if he thought that the move in Avis is nuts, you should check out Tata Motors, which is double the market cap and is up like 60% in 4 days. Um, so I was gonna say that, and then I was gonna follow it up with saying like I am not one of those people who has like a 90% hit rate, so I like to kind of ease off the gas a little bit in situations like this. And I think, there's a lot of commentary that goes into, take the 10% or look for outperformance and things like that. But I think if you're like, especially if you're like a newer trader, or someone who hasn't been trading for like 20 years or 10 years or something like that and hasn't had a variation of different markets. This is just a generalized statement. I know there's outliers and all that stuff, but I think we can fall victim to the veil of confidence of being able to spot trends and spot outperformance. And I think you can paper cut yourself to death before you get the real move. So what I try to do personally in situations like what we're going through is try to find stocks that have fallen significantly to major pivot points or or they're pressed up against major uh, trends, whether it be bullish or bearish. And I'll just give I'll give an example so that I can put numbers around it. So like if you just take a look at Roku, for example, Roku traded in a giant range all year from, call it 500, 490, to 300. So there have been three times where it's come down to that 300 level. Um, and the most recent time, which was like, last week before, it pressed up against a downtrend that it was in at that 300 level. So in situations like that, you get such an exacerbated move to the downside on a stock that was trading at 500 just in late July, early August, and it gives up a significant amount in a span of 2 months. So it gets depressed all the way back down to an important level, presses up against the downtrend, and then it has a lot of runway between a short term technical to like a longer term or intermediate term moving average or technical pivot or whatever. So another example would be like the Chinese names that we saw last week with like Baba and all that stuff. So you get these names that get depressed, and then you get these violent snapback rallies. So I like to look for stuff like that, and if this is just like for me personally, if I don't see stuff like that, unless I'm seeing something like, a firm, for example, trading up against an all-time high, or a lot of these cybersecurity stocks trading up against 52-week all-time highs, where I can get like actual alpha, I'm for the most part just kind of making a list of things that are performing well, despite sell-offs, things that are showing notable outperformance. Because generally speaking, when you get that turn, if and when you get that turn, those will be like some of the stocks that outperform first. And then conversely, I also look for stocks that are just getting, exacerbated to the downside. So if I just give Facebook, for example, just got sold off 17% and just cleanly bounced off that 200 day. So especially for people that are like newer, and I interact with people daily who ask me for opinions and stuff. So especially for like newer people, I find that you will find yourself in positions, because I do it, and I've been trading for almost 20 years, where you think you have this, you get some sort of feel or something like that, and you'll end up paper cutting yourself 4, 5, 6 times, and then basically fold right as you can get a more larger move on the back of a headline or something that you didn't expect. So that's kind of like a 2 cents that I think is important to know. And the last thing that I would say is there's like technical, when people talk about technicals, they talk about like moving averages and things like that. But there's things like weekly stochastics and McClellan oscillators and things like that. They give you more of an intermediate term perspective on technicals. And if you're not familiar with those sorts of things, I think it's at least important to have in your toolbox so you can kind of understand where things get violently oversold or violently overbought, and that just kind of gives you a little bit of a gauge to use your atlas or use your map or your technicals on a shorter time frame.
Awesome. Appreciate that, Wolfie. Yeah, I've just looked up Tata Motors as well. This whole sector is going parabolic. It's pretty nuts to see. I might have to get some more of these on my radar. Especially, I know that you've been doing some research into it. Would love to hear your thoughts on it, and maybe if there's more opportunity in the area.
Sure thing. Thanks for having me. So the auto rental space is a really interesting space. The bankruptcies we saw last year in Europe and the US really set us up for the rallies in both Avis, which is car, and Hertz, HTZZ retail side, and private Hertz shares. So Hertz was actually really interesting. I had a close friend sitting on the bankruptcy committee. The company had 700,000 cars. It had to liquidate 250,000 cars to pay off its securitizations, which was ABS debt raised by insurance companies for the company to buy cars and lease them out to vacationers, daily drivers, and business drivers. What happened last year was this forced liquidation to pay off the debt resulted in a defleeting of all the auto rental players, including Enterprise, Avis, and Hertz. Now, we are at a point in time where auto production was also down due to COVID. Not only was auto production down due to labor and distancing measures, it was down due to the fact that I think you have about 1,200 different semiconductor chips in a modern vehicle, even a vehicle that's an internal combustion engine, not an EV, because of all the electronics we see in cars today. So we're at 25-year lows in car inventories, and auto rental companies can't buy enough cars. So it's in order to refleet. Avis also had huge levels of ABS debt, so because of that, it didn't buy any new cars during this run-up in the Manheim Index. So what we're seeing now is a perfect storm, where you have reopening, people are vacationing, they're traveling. I would say within 3 to 6 months, business travel is going to resume. And, in cities like Las Vegas, Arizona, on the West Coast, there's a lack of fleet at these centers. So HTZZ, along with Avis, have gone parabolic because of those three factors: low inventories, increasing rates, reopening, and these semiconductor shortages, which, according to the CEO, of GM, it could last until almost 2023. Honda and Toyota also cut production by 40%. So there's a lot of interesting names in this space that I cover. Not only the OEMs like Tata and Volvo and Volkswagen and Ford and GM, but also the parts manufacturers. And the effects that we're seeing in supply chain we've never seen before. So super interesting space. I'm going to keep it short. A couple other things that we've been looking at in the space or in the market have been primarily special situations. So it started, I think, Wolf, with you back in the first quarter talking about Tiptree, insurance company that was trading at less than 50% of book value. The interesting thing about special situations is it doesn't necessarily matter if the market is going down or going up. If there's a strategic buyer, if there's a post-reorg, if there's a spinoff that's trading materially low to peers, and there's a catalyst, which is either new buyers, private equity, etc., you often can have strong outperformance. You can even put on dual class share spreads where you're looking at one company that has two different types of share classes, an A and a B class. And lastly, the stock space has been a monster for us. I mean, trading is not just trading on the long side. On the short side, I think SPACs have been my biggest source of alpha going into pipeline lots. Cypher down 55% in the last month. Those puts were up 800%. So that there are a lot of really interesting ways to navigate the markets. You don't have to follow the stocks that everyone else is looking at. I have about 38% cash now. You don't need to be in 100% cash. It's very hard to make money when you're in 100% cash as well. So I use technicals for trading and fundamentals for investing and focus on special situations. So looking forward to catching you guys on the next one.
Absolutely. Appreciate that, Special. I think the mic was a little echoey. I was able to make it out though. Thank you for the contribution. Okay, Mel, going to you next.
Just wanted to kind of talk about a few chart specific, some activity. So that's kind of what we want to do when we start to see some of these pullbacks and there's value areas that would be attractive, or to be able to monitor some money flow and rotation, is try to see what names we're seeing some unusual activity in. And so just kind of side noting a few, I know we did have a very lengthy conversation on Roku last week that did make a nice move out of the descending wedge. Just was interesting when I was reviewing this chart earlier that there was a bit of a character change in the sense that reviewing some of the previous pops, because we know Roku can be quite a mover, they faded and they found those sellers pretty fast. So we're not able to maintain and hold those levels. And it looks like now that we've been able to find some support here, that we're holding at least this breakout technically out of the descending wedge, but your price action is very tight. It's getting very tight here, also on declining volume, so it seems like you're not able to find as many sellers. I did post a chart there and found it interesting, and this is one of the reasons I love TrendSpider, is the seasonality. So you go from, of course, Roku not being one that has very much trading history, at least for the last 3 years. You go from a 33% seasonality in September up to 100% in October. So I do think it's worth noting, everybody kind of keeping an eye on that name, because we have that stronger seasonality that is coming into play, as well as holding well technically on Roku. And one other chart is ZM. I also dropped that one so everyone can view, but we had a 1.5 million share dark pool print here, and the reason that's notable is just ZM does not see very much size or much activity, and so there is definitely that difference when you talk about Apple, who's going to be very liquid, sees a lot of activity, versus something that just doesn't see much in general, and especially of this size. So I've went back all the way to March of last year to just kind of review and gauge some share size. Previously, the highest print level that we had was 518,000 shares. So this one, again, being 3 times what we've seen even at the largest. Looking to see if we can maybe start to form a bottom. I know ZM has definitely faded as there's been a rotation out of some of the COVID mania names, but 1.5 million shares at 256.12 is size. So going to be keeping an eye on this one, see if we can form a base and keep this one on watch. So just kind of wanted to point that out as something that was a little bit different characteristically and size wise out of the norm that we've seen.
Absolutely. Got it. Thank you, Mel. And appreciate you keeping an eye on those and sharing those, so transparently with everybody, and just kind of picking through the data for us. I know you're an expert, as are the rest of those over at Black Box Stocks. Real quick, something I just want to point out, if anybody checks my last tweet, I think it's my last tweet. So this has been something that's been requested for me to bring back. So a while back, there was no way for people to set a reminder for Twitter Spaces, right? It was just, I'm going to have a Twitter Space there at this point, put it on your calendar, right? And now they've kind of helped, but there's just one Twitter Space that you can make a reminder for. So it still kind of sucks, because I had 2 Twitter Spaces today. I had one back this morning, which was awesome, but I had to use my RSVP link yesterday for that one. Then I had to create another RSVP link. So what some people have reached out about is, a while back, I just made a Google Calendar. It's free, it's public, and basically you just add, yourself to it, and then you can see when all my spaces are going to be. And I'm going to get more active with it, because now I'm doing spaces every single day of the week. So we had, we had one today, we had 2 today. I'm going to have one tomorrow at 5 p.m. EST covering NFTs, and another one at 7. Then on Thursday, I'm going to have a space at 7, and then I'm going to have one at 6. 6, yeah, and then another one at 7. 6 p.m. will be real estate, 7 p.m. will be This Week in Markets, and then on Friday, I'm going to have one at 12, one at 4. So as you can see, there's a lot of spaces going on. So I'm bringing it back. So if any of my listeners or speakers, I really deeply appreciate it if you could share that out. It is last post. I put it up 13 minutes ago. It's just a Google Spaces calendar. And to any of the listeners, if you can't figure out how to get it to work, don't worry. Just DM me and say, Kenny, I want to be added to this. And just drop me your email or whatever email's best for you. And I will personally add you into the calendar. and then you'll just be able to see them show up on your calendar. And like I said, I'll just add them to there, so that way you don't have to kind of be all confused about like when is this happening. So again, if anybody could share that out, that would be absolutely huge. All right, I'm going to keep it rolling over to I think exclusive. I saw your hand up first.
Oh, okay. Thanks. Um, I wanted to piggyback off of when we were touching on the EV and TAN. So we posted a chart a couple hours ago for Tesla, and I know a lot of people were getting liquidated. A lot of people were making money. It's kind of 50-50. But if from looking at it from a technical side, we're looking at the daily here. Since mid-May, this thing has been on a clear uptrend channel, and as soon as it broke that golden pocket, we had the perfect touch to the top side of that channel, pulled back to the golden pocket, held there for a couple days, broke out again to the top of that channel, and I also pinged it in the space here too, so you can look at it. And now it's broken out of that symmetrical triangle, and now it's at the back test level for that. So we anticipate a move closer to the 820 to 825 range before running into that top channel again. You see a couple of naked points of control on top of that. So there's definitely some resistance ahead, but I think that there's still some room to either scalp or maybe even swing for a couple of days too on it. Definitely cover your entries if you do get into Tesla, just because it's a little bit more of a volatile name these days. But as long as the ETFs are performing and solar and the EVs, you should be pretty much good to go on that end. But that kind of piggybacks off of looking at more than just moving averages. You have to find these longer term trends. We're looking back weeks, months, sometimes even years to see where the clear visible channels are, and these kind of technicals, you can catch it. We were in at 775, and that's because that's where the support was at, where you can swing a trade for 2-3 weeks out and anticipate that move back to the upside, as long as you have confirmation, which is what I was talking about a little bit earlier. So that's just Tesla. We posted a couple other charts too. We noticed of course DATS. There's a lot of people talking about that. But something else too, GoodRx kind of has a little bit of an interesting form going right now. It's in the middle of the mid channel on this chart for the daily, if you're looking at it. But it's definitely worth watching because there's definitely a couple of pivots that are pretty close by where you can even scalp a couple dollars, which if you're an option trader is really good. Or if you're an investor, this is a really good long-term play too. So, that's another name that people aren't really talking about that we've kind of focused on. And we'll post, every sector. We're not really biased on anything, so we just kind of post what we're looking at from a technical standpoint to what looks like it could be something that could potentially move. So definitely worth, even if you're scrolling through our feed, you can look a couple weeks back. There's actually a bunch of charts that are still kind of lingering where we originally charted, where we're looking for moves to come in the next few weeks or months. I know LAC was another one that we posted a few weeks back, broke that descending wedge, broke through the pivot, broke through the golden pocket, and here we are at 23 from $20 from just last week. So these moves are, I don't want to say predictable, but you can kind of make an educated guess as to where it could potentially go if you're charting these longer terms versus the short term. So those are really the only couple ones that I wanted. I didn't want to take up too much time, but definitely worth looking at.
Got you. Appreciate it. Awesome. Danny, you haven't spoken in a bit. What's going on?
Yeah, I just wanted to chime in really quick about GoodRx. My fiance is a doctor, and she actually is a telemedicine doctor, and she has been for about 6 years now. So, in regards to GoodRx, just putting this out there, but they've been putting out feelers, not necessarily looking to hire teledoctors, but they are putting out feelers that can we put you on a list in the next 6 to 9 months to interview. So watch for GoodRx in the next year or so to start possibly announcing a launch of a telemedicine component to their service that they offer.
Okay, that would be pretty interesting. I think it never hurts to have more, data, right, for one of these companies.
Absolutely.
Yeah. Okay, Wolfie, going to you.
Yeah, I was just gonna piggyback on I think it was Mel on the back of that ZM dark pool whatever. It's interesting that that kind of volume came in here because that's like another example of what I was saying earlier about finding stocks that have been beaten up and they're in like exacerbated downtrends and then like the other downtrends significantly higher because that's another one that's in one of those things and it's currently trading basically at its anchored VWAP. I think I'm going off memory because I'm walking the dog at the moment, but yeah. So that's like another example. So in a situation where you could get a little bit of relief in the market, I'd look for a stock like that to if it breaks out of that exacerbated downtrend to continue up to the next 20-day, 50-day, whatever. And outside of that, like that just kind of illustrates a little bit more of the logic. Like people are willing to take bigger bets at really pivotal inflection points or at exacerbated sell-off points where they kind of feel like, hey, this might be a shot, and I could get that relief rally. So I just thought that was interesting that she pulled that one.
Wolf, I absolutely agree. I do not try to call bottoms or tops. I do find it very interesting when you have that kind of money flow or stuff that is particularly unusual in those areas where it's like, okay, now I'm paying attention. So definitely with you there when you start to see some of that build. Of course, I don't see that as something that's necessarily going to be that V bottom that just shoots right up, but it says, hey, get this added to your watch list and look for those entries based off of your trading style. And I'm sorry, Andrew, I know you have your hand up, but one other side note on GDRX, for those that may not know, there is a catalyst this week. They are going to be presenting at the Morgan Stanley Spark conference. That's going to be, I believe that's Thursday. So one I'm also very much interested in myself. So just wanted to add that for anybody that may be keeping that on their watch list and did not know.
One last piggyback, Mel. In names like that, the other interesting thing is these things traded so aggressively for so long that their implied volatility was expensive for so long, and it's beaten up right now. So it actually kind of pays you to take that shot, especially if you use options, because you're basically buying something at a discounted premium, and then when it starts to come back into favor, that premium shoots up typically faster than the stock itself in some cases if people want to pile in. So that's another reason that I like to look for those beaten up, exacerbated
And a
sell-offs.
lot of times what you're seeing is a lot of the share activity that'll start to build on some names that may have been beaten down or ones that are building a bottom. We've seen a lot of these that have been going sideways. And even though they've been beaten down, they are actually trying to constructively build a base opposed to just this drop and pop. And oftentimes I think you start to see this accumulation zone, and TrendSpider definitely helps us with that as far as being able to see those volume shelves. But you don't have as many eyes necessarily on the activity that's occurring on the dark pool. So when you start to transition over into what comes into and positioning into options flow, that's very much lit across the board. And that's oftentimes when we start to see momentum, when we start to see sweepers coming in and they're starting to put money to work, because not only are we able to see that as retail and those that follow options, but that's very much still activity that's being monitored by hedge funds and algorithms, high frequency trading. So you tend to see those pops and that IV pump when you start to have that transition over into now there's positioning coming into the options market. So I think it's just a great correlation to be able to kind of monitor and track money flow to complement our technical analysis or a fundamental analysis with what we're seeing.
Love the back and forth. Thanks, both Wolfie and Mel for that. Andrew, I saw your hand up next.
Yeah, a lot of good information there on GoodRx. That's awesome. I didn't even see that catalyst there. So that's awesome to look out for. Yeah, I've been watching that name as well. I had that one on my weekly watch list. And yeah, it looks like it's building out, this little sideways action where it looks like the low end of the range from the past like 2 weeks was around like $39.55. So yeah, that's like a nice level to trade against where it's like, if we start trading below that, hey, maybe the trade doesn't work. But yeah, this one looks like a solid candidate. I see the short float is also 23.01%. And the share float is only 69 million. So yeah, if they speak at that conference in a couple days and investors like what they hear, it's definitely a really good candidate to watch. So I'm definitely going to just keep watching that one pretty closely. And along with what Wolf was saying, that's kind of the strategy that I've been rolling with as well. Like, yeah, if there's some of these themes that are really just like ripping to new highs, that's great. Get involved in those as well. But like, look at some of these things that are getting really taken to the woodshed. So one that I got pretty interested in, I actually started a position in today, was Facebook. And Facebook, it's just had so many negative headlines, and the stock is down 17% off the highs. So this one's gotten pretty beaten down. But what I saw today was, Facebook's now trading down to the 200-day moving average. So I was watching it and I was like, let me see if some buyers appear at the 200-day. And sure enough, there were some dip buyers that came in. And I also saw, I was looking at the gamma in the stock, and there's a gamma wall in this stock at the 320 strike, which pretty much coincides with that 200-day moving average for Facebook. So yeah, for this one, I was like, you know what, my trend model is at a -1. This is kind of a market environment where I want to be a little bit more tactical. So I was like, you know what, let me take a shot at Facebook at the 200-day moving average. I have this nice gamma support to trade against. This one might be like a little short-term swing trade, like nothing too crazy. I'm not going to like shoot for the moon on this one. But there might be some long-term allocators that say, hey, let me buy some of these FANG stocks. Let me buy Facebook. It's at this long-term moving average.
Got it. Good points. And yeah, I agree with you with like finding that catalyst and stuff. I feel like we always discover stuff in this Twitter space. We had boots on the ground multiple times for different stocks. We find catalysts. That again is the whole point of these to everyone that's listening. It's just to collaborate, right? Bring our shared knowledge, be transparent with it, openly share it for free to the public. Again, I just reiterate, all I ask for is that you engage with these speakers, right? Go in, comment, add value, talk with them, ask your questions to them. They're really, really great at all those type of things. And, I think they're a lot more likely to respond again if you are following them. With that, I'm going to go to you, Jay. I'm also going to start, so I think you'll be first, the wrap up just because we are at around 9:50 Eastern time. So it's getting a little bit late by me. So just going to start off and, just go around and just have everybody add if there's anything else, that they're looking at for this week, or any just final remarks. This would be a great time to add it. So I'm going to start with you, Jay, to your comments and then to go into wrap up.
Hey, thanks, Wolf. So a couple quick things. I think I like what Andrew was talking about, essentially contrary investing. We've seen kind of factor exposures change where tech has underperformed, whereas value, energy, not just oil and gas, but uranium and in other value sectors have outperformed. Healthcare has also underperformed. So what I've done is I've put together a list of names, and I think as an investor, this is why it's important to have different factor exposures. Is a list of contrarian names. Mercado Libre, for example, is down $400 a share or 25% in a period of 29 days. You have Facebook down 17%, and Time Magazine calling out Zuckerberg after 11 years prior, calling him, a rising leader. So I like to do what the media, the opposite of what the media is saying. On the other hand, taking advantage of supply shortages in the gas space with AR, SD, RRC has been very fruitful. URA on the uranium side, and most importantly, to have diversification, to have some cash, which is your margin of safety, is really important in this type of market. And look at names with lower beta volatility, like Ladder, paying a 7% dividend, trading at a 20% discount to NAV. Or healthcare names that have sold off because of this Medicare scare on the budget, that are actually decent companies like Cano in the SPAC space. So, you know, it's very difficult unless you're doing it full time to manage a full, you know, diversified portfolio effectively. But that's the long-term goal, along with trading around the edges. So, you know, thanks for having me on. Really enjoyed listening to everyone on here today, and looking forward to the next one.
Absolutely appreciate you, Evan. Going to you, my wonderful co-host.
Yeah, no, I appreciate you for letting me come up here and co-host with you. Very quickly, when I'm watching some earnings tomorrow, we got J.P. Morgan, Delta, BlackRock, a couple really big names. But what I really want to leave you all with is that one thing that I think that I know everybody in this crowd has in common is that you like listening to Spaces. I mean, we're in the Spaces right now, and I think with that, you have to be following Wolf Financial. He puts on these Spaces all the time. He's talking about that Google Calendar, and you can go in and sign up in that. I'm lazy. I'm just going to follow the guy. Like, I get notifications when he goes on. I see it on the top of my thing. But the minimum base you got to be doing is you got to be following him. Got to follow the account. They put out amazing tweets, but for me, he's the Spaces king. He's always on this stuff, doing it all the time. So if you're into these spaces, make sure you give him a follow.
Appreciate you, man. I know we'll be back on Spaces again soon. Thank you. You know, it was so cool this weekend at FinTwit conference in person to talk to people who, have been in the spaces and who have chatted, and it's made an impact on their life. So I love doing this. For anyone who's unfamiliar, this is literally my job. I'm on the clock right now. I work for the Wolf Company. I just run the Twitter account. I just made it kind of mine. So I have a lot of fun with doing these, but I also, I guess I technically get paid. So it's a win-win situation all around, and I get to live trade during them. So we're all winning here. Ben, thank you for spending like 4 hours on Twitter Spaces with me today, and like several hours over the weekend. I'm glad we got to have dinner and everything together. It's great having you on here tonight. Would love to hear any other closing words from you. He might have dipped. He totally might have dipped. Oh, there he is. No, I can't hear him. Can you hear him, Evan?
No, I hear some maybe background noise a little bit, but I can't hear him.
Can't hear.
Off, but
No, I can't hear him.
All right. Well, I saw the emoji, so I was hopeful. But I'll speak for Ben. Ben hit 100,000 while we were at FinTwit conference. It was great to be there for that. I had 25,000 at the same time, so I'm a quarter of the clout that he has. The man, honestly though, was awesome guy to be around, and just clearly had a very smart presence. He gave a full hour-long speech with Jake from TrendSpider that's recorded, that's going to be coming out at the end of the week. So if you really want to see like a really nice recording digging into his mind, I highly recommend checking that out. But thank you for being on, man. Danny, going to you.
Definitely want to give you a shout out for putting the Spaces together. You've been super consistent with it, and I think you right now are the voice of FinTwit Spaces. So definitely big shout out to you. Appreciate you also bringing on a really wide, diverse panel. I think the response to people signing on and listening, I think, is enough to say that what we're doing here is the right thing. So really appreciate you putting together the panel and the platform for all of us. I'll talk a little bit, just 1 minute, on what I'm looking at. Interesting, I forget who brought Melly up, but I just posted that chart up above. It's got hidden bullish divergence. It's extremely oversold, but we are under the year-to-date anchored VWAP, but we're right at that trend line, so I think it could be an interesting bounce play here. But what I'm looking at for the rest of the week, DATS, very interesting. UPST, beautiful bounce. It's coming up to its highs here. Watch for a bigger move there. Something I don't think anybody spoke about, LTHM, Livent Corporation. Very nice breakout of the downtrend line. Affirm coming up to all-time highs. Beautiful cup base that's formed right there. We talked about GoodRx. Datadog, since that peg play, it's been grinding up in a beautiful channel. And I'll leave it off with SoFi. SoFi had a false breakout of its wedge, I believe, 2 or 3 weeks ago, and broke 17, and it's been ripping. I think we'll hit 20, which is the top of the wedge, possibly this week. So just watch for SoFi to continue to rip this week. Thank you very much again for everybody that attended, Wolf for putting it together, and all the panelists. Big shout out to all of you.
And Danny, we also have that SoFi Bank Charter Catalyst coming up in November.
Yeah, definitely looking forward to seeing that. I think that could be a big, big unlock. Okay, Ben, I'm not sure if you're back in. You said you logged out and sent a mic request, but it's not showing up on my screen, unfortunately. So I'm going to keep the ball rolling. So Shark, I sorry, maybe I should have gone to you a little bit more tonight. I didn't. I didn't see your hand up, but I saw you interacting on Twitter, and I know you were engaged and listening. So I appreciate you being
Oh
here,
no,
man.
no problem. Thank you for having me. And one thing I want to do is say, thank you, everyone here that's still here. Go ahead. I really suggest following everyone here on Twitter. All the speakers, they're amazing. Their content's absolutely amazing. And just thank you for having me. Right now, I'll be honest, there's uncertainty in the market, right? So for me, I've been kind of playing things on the daily trends. So just kind of flowing with the stream a little bit, following the flow, and playing things cautiously. Just because we have the CPI report tomorrow. There's some other catalysts that are happening the first week of November, so I'm okay with sitting on the sidelines for now until I have a more definitive trend. And also, I'll be honest, I've been playing some things on the downside just because that's what the trend has been, throughout September. So, but thanks for having me. You're wonderful, Wolf. You're one of the best always. And yeah, all you guys go get them tomorrow.
Appreciate it, brother. Looking forward to packing the market and hunting the market with you tomorrow. Andrew?
Yeah, thanks for putting the spaces on. These things are so awesome, just getting together with everyone and chatting about the markets and kicking around all these ideas. So yeah, thank you so much for putting this together. Congrats on the 25K. That is a huge milestone. And yeah, just to close things out, I think the most important thing here is the market, like everyone has been saying, it is very uncertain. And just with my own process, my trend model is saying the market is at a -1. And pretty much there's a lot of good reasons for this market to continue higher and also a lot of good reasons for this to move lower. I think, if you're all in cash, good for you. If that's your game plan, stick with it. You're going to be just fine. If you have some investments in the market, either way, likely you're going to be just fine. I think the only way you can really mess up in this environment is if you get really stubborn in a market view and you go, I know the market is going to go up, 100% certainty. Or you go, I know the market is going down with 100% certainty, and you dig your heels in. So I think no matter what you're doing, so long as you're not stubborn and you go, okay, maybe I'm long, maybe I'm short, maybe I'm in cash, here's what would have to happen in the market for me to change that positioning. I think so long as you can answer that question, you're in a good position and your longevity in this, is going to be just fine. So just make sure you have those things mapped out. Like, what would it take for me to get more aggressive? What would it take for me to reduce my risk? I think that's the most important thing.
Very wise words, man. I really do agree. You can't get cocky. You have to continue to put in, the time and effort and stay humble in this market. There's plenty of opportunity, but there's also plenty of downside. So I really do appreciate those words. Wolfie.
Yeah, I just want to say thanks, Wolf. I don't think that people understand how much effort goes into this stuff, so good on you for putting it together. Appreciate the ability to be part of it. As far as what I'm watching, well, first of all, it's earnings season. I wish I had resources like this when I was learning to trade. So I think one of the great things about it is you get a diversified opinion base and you get to hear people communicate about what it is they're watching and why. So, I think it's a really good way to advance your learning curve. So I would just say that the more that you don't have to like everything everybody says, you don't have to agree with it, but just having, at least hearing the perspective of someone else is interesting. The other thing is, this is the only profession where from day one, the rookie and the amateur who's never done it before is playing against the professional. So if you envision it as you playing basketball and the first time you ever play basketball, you're playing against LeBron, that could be daunting. And I think things like this are really, really helpful for people like that. So shout out to whoever's spent the 2 hours, and shout out to you, Wolf, for that. So yeah, it's earnings season. Paying attention to some of the guidance, some of the stuff people are going to say. I think a lot of companies are going to blame some of the shipping issues for why they may have missed, or it could be like a recurring Q3 thing, supply chain issues Q3 thing. JP Morgan kicks it off tomorrow, so I want to pay attention to what they say. They kind of have like a little bit of insight about how the money's being used, basically. Now, that being said, I do put up free earnings previews. So like if you have a stock and you want to like get a context of what the expectations are on an EPS basis, revenue basis, stuff like that, that's on my website. It's in my bio. It's totally free. No signups, no paywalls, no emails, nothing. I just do it because I wish I had stuff like that when I was learning. In terms of stocks, yeah, we mentioned Roku, we mentioned Zoom. Other names are like one name that I thought was interesting today that used to be a fan fave and could run on the back of the solar move is LAC, Lithium America. It's kind of pressed up against a critical 25 level, which I thought was interesting. I also have like a couple of other names that I'm watching. So like Ambarella is holding up, AMBA. It's one of the chip names that was holding up. Qualcomm just announced they're going to have a $10 billion buyback. I think that's interesting. I want to see how Apple performs on the back of their cut and some of the chip makers on the back of that. And yeah, so that's about it. Upstart, Affirm, I think Ben mentioned them. Those are on my list as well. Yeah, so I would just say stay a little nimble. Whatever you think you could lose, I would say, you know, deduct 30% from that number at least. I think people, myself included, tend to be a little bit more optimistic. And yeah, so thanks everyone for your time. Thanks, Wolf. Thanks everyone for speaking.
Absolutely. I always enjoy hearing what you're looking forward to. A lot of those names are on my list as well, so be sure to be following your tweets to see some of the charts that you put out. Wolfie puts out great charts. Big shout out to him. And also thank you for the recognition. There is certainly work that goes into spaces. For reference, just in the last 13 hours, I've DM'd with 43 different accounts on Twitter. Plus, I also DM with about 10 people on Telegram and others. So thank you to everybody. It's worth it though. It's worth it for sure. I'm not very far into my trading career. Only about a year out of college, and to be able to absorb all this information is, I think, invaluable and really sets me up for success. And I think a lot of people in the crowd feel the same way, for themselves. Okay. Stock Talk Weekly. Any closing remarks?
Hey man, yeah, I just want to say, thanks for hosting these. I love hopping on your spaces. I used to host a lot on my own, and ever since you've been doing them, I've just kind of preferred coming in here and jumping on these. So I appreciate you for doing that and setting these up. As far as the market goes, I'm just going to kind of piggyback and resonate on what everybody's been saying. I mean, obviously there's a lot of different styles on this panel, and everybody trades a little bit differently. But I think the one consistent thing you've heard, if you've been listening in the audience, is that we all, kind of feel like the market is choppy and are taking, some level of caution with that regard, and for me personally, what I do generally when I feel like the market is choppy, which, if you look at the indices, it's really difficult to make a technical argument that the indices are not in a downtrend right now. I mean, you can make that argument, but it's difficult to make that argument that they're not. And so, when the indices are choppy, for me, the way I trade is I just really shorten my profit targets. I lower my position sizes, and I shorten my time frames on the trades, more importantly. And, the reason for that is because, I don't want to call it a healthy market, but, in a bull market, you can depend on swing trades to flesh out if your thesis is really good. If you have a really good technical setup and, a cooled off stock or a bottomed out stock, the good technical setup, good fundamental story, good catalyst on the table, in a bull market, you can ride that trade, for weeks, sometimes months, sometimes even years, and make, easy compounded profits, swing trading that way. In a market like this, I tend to day trade, and I'm not a day trader by, profession. I do this for full time, but most of my trades, historically are not day trades. But in a market like this, I'm day trading a lot more often than I normally do, and that's because I'm trying to preserve, moves that either I, felt like came out of a good technical setup, or I felt like came out of a good, news catalyst, or a sympathy to a hot theme. Whatever reason I took the trade, when I see those profits, I'm taking them in a choppy market because I can't depend on the indices to carry that price action out. Because, in the indices, an indices dump can cause, either an underreaction to, a great news catalyst or a really good technical setup, or they can cause, an overreaction. And so I just play them and take what I can get. And, if the stock corrects down and I feel like there's a longer term narrative there or a longer term thesis, then maybe I'll re-enter. But when it's choppy, I'm playing smaller position size, shorter time frames, and I'm really sticking to like trades that I have a really good reason to take. In a hot market, I might throw gum at the wall on certain trades and just take them for the sake of taking them because I feel like, in a market where everything's running or a sector's really hot. But, in this market, I'm not doing that. I'm being very selective. And, I think that's a good piece of advice to take because I think pretty much everybody on this panel has reiterated that they're being more cautious and taking things more slowly and taking profits when they see them. And so until you see a confident reversal in the trend and you see that the indices are back to trending to the upside on a consistent basis, then I think you can start taking swing trades and depending more on the upside. But until then, I'm playing it pretty cautiously.
Okay. Appreciate the insight there. Mel, I see your hand up.
Just going to echo with what so many have let out with. Your energy is unrelenting. Your passion is there, and the professionalism of your spaces is bar none. The panelists that you always engage with tend to come with just their specialty, the value that they want to offer, and more importantly, no ego. It's just that collaboration, camaraderie, and that's just invaluable. So I do just want to hats off, really appreciate what you're building out. Otherwise, not necessarily going to go into ticker specific. I just do truly value. I sometimes wonder if I'm getting more from the panelists and what everybody is offering in perspective just with their own specialties. And there is just so much with that even though I have my own specialty and something I look at, I'm able to give, but I feel like I get a lot more than I receive. And just kind of wanted to personally kind of highlight some of what Ben offers as well. I think we talk about a lot of technical information, but if we have some newer traders on here, I think it is really important that you spend some time learning about internals as well, because as we get into these trivial times, we want to make sure that we're also evaluating those setups and where you start to have sentiment lean too much on one way. Ben, thank you. I'm not always able to get as engaged and deep into it. I am one of your members with your subscription. It's cheap enough. And you have 20 years in the experience I value with what you offer. So thank you for putting that out, because I think as we talk about technicals or setups, that an overview of the market is just as important so that we can just really know when to kind of tap the brakes or put a little bit on the gas. So appreciate everybody that is on here. Thank you all, and look forward to engaging with everyone next Tuesday.
Thank you so much, Mel. Appreciate that. Glad you have the same energy. I've seen it. So it's always a pleasure having you on. And speaking of Ben, we got you back up here.
Yay, I'm back on. Mel, thank you so much for the kind words, and honestly was a highlight of the trip getting to spend some time with you and chat and get to put the face and personality behind the wonderful person that I got to know on Twitter. So it definitely was a highlight of Orlando. And same with you, Garb. It was just a fantastic conference. I highly recommend anyone listening, if you're debating it or thinking about it. It was such a great time. I highly, highly recommend trying to make it to and meet some of these people in person. Amazing, amazing group of of speakers. It was an incredible how much we were able to learn in such a short period of time, and just getting to share all that with the community was wonderful. So again, I want to mention one more thing. Mel does an amazing job of tying together dark pool prints, option call, and flow, and these are things. Like she said, I've been trading for a long time, 20 years, but these are things that are relatively speaking new to me. Over the last 6 months and certainly over the last 3 months, her and Vegas have helped me tremendously in kind of picking up my knowledge in dark pool prints and call volume, call flows. So I really, really appreciate their efforts in helping to educate me.
For sure. I echo that sentiment. There's some really complicated parts of the market, and some people on here make them seem really simple, and that's a talent. Exclusive, SCU. I think you might be the finale here.
Yeah, just wanted to say a really quick shout out to Wolf. This has been a really, really awesome experience. Bunch of great traders, bunch of variety, and it's like a lot of people have already said. It's really cool to see different styles and different views. Bears, bulls, whatever. It's really good to kind of monitor different trader psychology because everyone's different. Everyone's got their own style, so there's no right way to trade. As long as you're managing risk, I think that's the basis of it all. And it's always a learning process. So I'm definitely looking forward to being back on some of your spaces and definitely absorb some more information. To piggyback on what Ben and Mel were just talking about, I have been trading options for a while, and I just started using option flow data last month. And it's not that I was ever against it. I just never really had it as part of my routine or my style. But, just looking at some of these things like SoFi, we're talking about SoFi and where it could potentially be going in a technical standpoint, but I'm looking at open interest and flow data into the 20 strikes. You've got 160,000 plus in open interest, and these are the kind of things that you may not necessarily be looking at if you're looking at the option chain in your broker. And these kind of things can just be pointed out with flow data, and it's just such a powerful tool. So if you can use it for free or cheap, there's a bunch of different services out there. Highly recommend it. I've just introduced it to my style of trading, so it's definitely worth looking into. I'm still learning about it, but it's definitely really good to adopt. A few tickers that we're looking at. We noticed a break on the 50 MA on BBIG, Vinco Ventures. 795 is a key zone for us for the bulls to break to the upside. That's at the point of control right above the 382 retrace. So that's it's looking pretty bullish. I had a pretty good move today into the value area, and we were not expecting as much of a move it had, but it was definitely a good buy through the 50 MA. Another name, we already went over Tesla, already went over DATS, GoodRx, LAC. We kind of noticed the volume into the close on Beyond Meat, and there was a really big spike. So I'm definitely going to be looking at that a little bit more pre-market tomorrow to see what kind of action we see there. A little bit less spoken about name, CROX. So Crocs bounced off a really major pivot here back from July and late July. And it looks like we got to bounce back into the 100 MA, so that's pretty bullish. We might see a move into the 80 MA on the daily, so we're going to be watching for that this week. That would be about 4 to 6 point move for us if it goes our favor. But of course, you're going to need to monitor market conditions, see where the money's rotating, because you don't want to just go in blindly. You have to look at the big picture too. But to kind of wrap it up here on my end, it's really all about managing risk. Cash is always a good position. Never force a trade. I always tell our members, never force a trade. If the conditions aren't there for a trade, there's no need to force it. You don't have to make money every day. Not losing money is also a win in our book. So, always managing risk.
Yes, sir. That's definitely what we preach. Okay, that was everyone that was going to go. As for myself, just gonna be back on with the spaces, just gonna continue, doing my style of trading, which is a little bit of everything. I've talked about this in the past spaces, but this was a very technical focused spaces. But we also, I think it's a very accepting community of all different styles of trading. You could be long term, fundamental, not planning to place any trades for the next 2 months, and I still think there's value in these type of things. And to come to them and just have the open mind to understand technicals, fundamentals. It's something like only like 13% of traders use. What was it? It's like 3 to like 13 use options. I don't know. It's a very small amount. So like, don't feel pressured into doing these things, right? But it never hurts to listen and to open your minds and to put $100 of skin into the game, right? You don't have to spend big money on these things either. If something's just out of the range of price that you're not comfortable with, just don't do it, right? Nobody ever lost money not taking a trade. They might have lost out on gains, but they didn't really lose money. So just continue to, understand that there's a long time horizon. I think especially if you're, in your 20s, 30s, 40s, I think even your 50s, it's looking over here. There's a long time horizon. So just keep at it. Keep coming onto this part of this community. Keep coming on the Wolf app. Hal with me over there. It's wolf.financial, links in my bio. I'd love to have you on there. We're going to start some big incentives, actually. We're going to have some incentives, actually, for posting on there daily. So I would recommend hopping on. We're probably going to start those next week. We'd love to have you join the community, and I do, check to, just interact over there all the time. So with that being said, Twitter Spaces tomorrow are going to be 5 p.m. EST for an NFT space, and then I think there'll be a 7 p.m. EST one. Also, super, super excited to confirm this. Next Monday, myself, Ben, and Jake will have the pleasure of having a Twitter space with Brian Shannon at Alpha Trends, the creator of Anchor VWAP. We secured it. It's going to happen. It's going to be the 4 of us on spaces at 6 p.m. EST next Monday. I think that you really, really don't want to miss that space. So you might want to just throw it on your calendar now so you don't double book anything over it. Or you could DM me your email and I will add you to the free Google Spaces calendar so that you can see all of those. Also, big shout out to Twitter Spaces, who sent me a nice merch box this week. So shout out Twitter Spaces. They recognize our community, and I'm appreciative of them.